For the week commencing March the 17th, there's three major events that we're going to be looking at, all from central banks. Before we get looking at that detail, just let's have a quick reminder of why we look at calendar events so that we can find high probability trading opportunities, just like we saw with the non-farm payrolls this month. Here's a quick reminder. Here's one that we had recently triggered in on Friday, the 7th of March. Now, it's arguably the most important data point around the whole world, which is how the US labour market is doing. In particular focus right now, because we'd had a series of negative sentiment prints for the US. University of Michigan sentiment was down, inflation expectations were up, S&P global PMIs were down. There was a number of sentiment readers, consumer confidence as well. So sentiment was just kind of bad. But how's the hard data doing? That was the big question. So we knew the markets would be very sensitive to any hard data. And of course, the hard data that was in intense focus was the NFP. Now, if you look at the print, came in below forecast. The prior was revised lower. Unemployment rate towards the upper end, okay, of top end of expectations. Average earnings look towards the lower end, and downward revisions across headline payrolls, average earnings, month on month and year on year. So on balance, we knew that was a negative print. We knew that was likely to give some more dollar weakness. And so out of this event, and the reason, you notice it wasn't below market's minimum expectations, but we looked at the data before and we looked at the forecast distribution, and we can see on the forecast distribution that, on balance, although the headline wasn't really too much of a trigger, the unemployment rate was towards the upper end, 4.1%. There was quite a few there. But if you look at the average earnings, you can see here 4%. Look, only three forecasters thought average earnings was going to be down at that 4% year on year. So on balance, you look at that, that should allow the dollar to weaken. So we had a euro dollar buy bias out of the event. And you can see here, this is the data. You see, as it broke, price immediately moved up to that R2 pivot point. That was the obvious place to take profit. As it pulled back, you had opportunity to move to break even, and actually we hit that pivot point and went back up to the R2 pivot point in the session. Now, I would have expected the dollar to have been a little bit more weaker than it was on this print. Nevertheless, there was still an opportunity out of the print up to the pivot point with opportunity to take profit or at least move to break even. So that's why we look at these high probability calendar events. When they turn up, they do give unidirectional opportunities that are high probability, and that's why we focus on when they turn up. Okay, as we come to this coming week, there's three central bank decisions that are worth covering. The first one, obviously, is the Federal Reserve interest rate decision. This is also the summary of economic projections. So we get the dot plot as well as what the Fed are looking forward to in terms of GDP. Now, the real interesting one for me is going to be where they see GDP going. Now, you can see that they're anticipating GDP for 2025. You can see at the top of the screen, top of the left-hand side of this table, they're expecting to be at 2% in 2025. Right now, the latest Atlanta Fed GDP tracker saw a big drop. So I want to see what the Fed are thinking about in terms of GDP and where they're seeing interest rates going. We could see a significant move in the S&P 500 if we see a bigger than expected drop in GDP, an increase in unemployment rate, and we see a drop in the dot plot. So if we take a look at short-term interest rates, now bear in mind that this has been done before the non-farm payroll print. And the reason that's important because we've seen a lot of negative data out of the US, University of Michigan. Inflation data surprised to the downside, sentiment surprising to the downside, US consumer confidence missing, some PMIs missing, but it's the hard data that's going to really move the markets. A lot of it's just been soft data at this stage. Nevertheless, with these tariffs being implemented, and then whether they are still on by the time we're making this video remains to be seen. We have to sort of factor in this tariff drama. But look at Stir Markets on the screen here, and you can see that they now see three full interest rate cuts this year. Okay, so it hovers around 2 plus 3, but that will be the question. Is the Fed seeing a steeper path of rates because they're concerned about GDP? That could really send the S&P 500 lower. Regardless, that's worth us looking at, and we're going to be focusing on that dot plot and what we get there. That will likely provide the best opportunity. So definitely worth taking the Federal Reserve decision this coming week. Then we have the SMB decision. Now, inflation forecast from the SMB, you can see that they're expecting it to be, 0.2, and for the first quarter, that red line there, they're expecting about 0.2, 0.3, and you can see that the last SMB, the last Swiss inflation print came in at 0.3. So inflation is pretty much with the SMB we're expecting it to be in December. Now, if you look at the short-term interest rates for the SMB, they're no longer projecting negative interest rates. There was a stage where they're expecting negative interest rates around the end of this year, start of next year. That's been priced out. So what we want to see from the SMB is, do they see negative interest rates ahead? And if they do see negative interest rates ahead, that should likely result in the Swiss franc moving sharply lower. Bank of England decision, similar to the Fed really. It's all about GDP growth. We want to see, does Catherine Mann, is she still maintaining that desire for a 50 basis point cut? Right? Is she wanting rates to be down at 4.25? It will be growth again with the Bank of England. We'll be covering that nearer the time, and we'll fill you in with the details, specifically what to look for. Similarly with the SMB and the Federal Reserve interest rate decision, we'll be there filling it at the time. These are a little bit trickier to trade in that you need to be factoring in a number of different factors together. So we'll be doing that at the time live. That's what to look forward to this week. It's a big week for central banks.